Aloha, this is Digital Micro Trading Journal. Thanks for stopping by. And this is all about the summer rally slowdown with the red arrow here. You can see the third week of this double-digit rally in the S&P 500 and the Russell 2000. This last week ending up with the non-farm payrolls, we week-to-date performance-wise really slowed down. So this has been a very strong summer rally with double digits in the S&P 500 micros and the Russell 2K. The checklist, what happened in 3 weeks? We had big tech earnings, we had FOMC rate hike, we had month-end, month-begin, and of course we topped it off with last Friday's non-farm payrolls. Let's go to the charts. So we have the weekly M2K here, and I just want to briefly get the order flow idea here. And the context is the strength of the punches. You can see these last 3 weeks here with these magenta bars, and then the overall distribution. You can see this red arrow pointing up. Distribution week by week is lessening, so sellers are abating here, and that trend continues. It's not like we've got overall buying, selling still there, but again, with the strength of the hits these last 3 weeks, and then so the takeaways for the weekly on the M2K is the anchored VWAP. That's the red arrow at the top here, 1900. So if we were going to get a modest mean reversion next week for this new week coming, that's my first price target, 1900. The other second arrow below it is this gap, and that's the 4-period volume weighted moving average. So there you have it. Those are my takeaway reference points for the weekly chart. Let's go to the next chart. What I've got up is on the left side, we've got the M2K 24-hour candle chart, and I've got for reference and context how the MES S&P 500 on the right side. And the takeaways here on the 24-hour on the left side is the first thing we want to go to is, again, what did we do Friday for the anchored VWAP? And that came in at 1910. So before we go to 1900 on the weekly, we've got 1910 on the anchored VWAP. Look at that strength. We've just had successive highs for the last several days last week, higher highs each day of the week. And we closed here at 1921. So again, the revised mean reversion target here puts me right at 1910, right where the red arrow is. That's the 3 EMA. Above it, the 3 volume weighted moving average, 1913. And down here, the takeaway again is Friday's open range for the RTH on NFP Friday comes in about 1889 and change on the top line here. Going back to the order flow here, notice we've got this small punch magenta below the zero line. That means basically sellers are happening, but buyers are totally keeping it up. Unlike, go to the right chart, S&P, we closed very slightly in the red or magenta, and that strength weakens here, was small, but the overall buying is dissipating here, these green bars. And same here where I've got buyer's control on the M2K, slight decrease, but they're still in control. Let's go to the bread and butter chart, the 120 next. So as a day trader for ROI, really a 120-minute chart is a longer time frame, but I really depend on this chart. And this is why I've got so many notes on it. So notice this arrow here with the FOMC reaction, where we were back there on July 27th, and this zone here where we really had price consolidate in the 1847 zone, and basically we left that, and we had nothing but green on the order flow cumulative delta. It was all buying, and then we hit this next level until non-farm payroll last Friday, and you can see this August 5th RTH open range. So what I'm looking at going into Monday are my levels. What I'm aiming for is sometime next week a revisit into the low 1900s. Last part of this chart is the order flow. The strength of the hits on Friday was definitely on the distribution side. So this first order flow showed me, though, that sellers couldn't hold this. So this is, again, confluence area, open range. It got denied by sellers, but look at where we were on the strength of that sell. And then the cumulative delta here, it never was green all of Friday. So again, that could have just been people lightening up for the weekend, and then the pace. There's no pace on bulls here, but certainly sellers aren't showing up at all. So again, in conclusion, even though the pace of this 3-week rally has basically lightened up this third week, so I'm just being a lot with dry powder right now, and I'm going to be looking at these range breaks, and I just don't want to be on the wrong side. Trade them well. Do your own research. Again, this is just a trade journal, not a recommendation. Take care.